What's up everybody? Welcome back to another video. This time, I'm going to give you my valuation for home improvement retailer Home Depot Inc. We highlighted this company in a recent video for dividend growth stocks that look interesting for the month of October 2022. For this video, I'm going to take a deeper dive into the company and also show you what I've determined to be a fair value for Home Depot and my target buy price. So let's get to it. This is the Dividend Growth Income channel. I am Nick. Thank you for joining us. We love dividends and especially dividend growth stocks. If this is your thing too, please smash that like and subscribe as it really helps us out more than you can imagine. I hope you enjoyed this quick dividend stock valuation analysis. Please do keep in mind I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love for dividend investing. Nothing in this video should be taken as financial advice. Investing in the stock market carries risk, so please do your own due diligence. Also, I want to acknowledge the destruction of Hurricane Ian, and we are pulling for everyone in the mix of this nasty storm. Our thoughts are with the viewers in Florida and South Carolina who have been affected by this awful disaster. So if you live in North America, you certainly know Home Depot. They are the largest home improvement retailer. The entire addressable market for home improvement retail is $900 billion, and Home Depot has 17% of that market. At the end of fiscal 2021, they had 2,006 stores across the United States. In addition, they have 182 stores in Canada and 129 stores in Mexico. Home Depot's business serves three primary goals. The first is to provide the best customer service experience in home improvement. The second is to extend their position as the low-cost provider in home improvement. And three, to be the most efficient investor of capital in home improvement. We highlighted Home Depot in a prior video as its stock price has come down considerably in 2022. Home Depot is down 32.47% year to date, and this has put the company at a valuation we don't see very often. Because folks, Home Depot has been an incredibly rewarding company for its shareholders historically. Even with the massive drop we've seen this year, Home Depot is still up 70.88% over the last 5 years. The S&P 500 is up 44% over that time. A $10,000 investment in Home Depot on October 1st, 2017 would be worth $17,088 today. Now, if you had bought Home Depot 10 years ago and managed to hold this entire time, you'd be sitting pretty as shares are up 352% over the last 10 years, more than double the S&P 500's 10-year performance of 154%. A $10,000 investment in Home Depot on October 1st, 2022 would be worth $45,247 today. As remarkable as that is, those numbers ignore the dividend Home Depot is paying, and this is a dividend that is growing at an amazingly fast rate. And if we factor in dividends, the 5-year total return for Home Depot is 92%, where your $10,000 investment would have returned a total of $19,210. In a 10-year investment, the total return is 465%, making your $10,000 investment 10 years ago $56,507. So remember this the next time you come across an investor who is dismissive of dividends, believing them to be insignificant or meaningless, because the data here speaks for itself. Dividends are pretty damn important to the picture of your overall return, I would say. Now, 2021 was a very strong year for Home Depot. This company did very well in the COVID pandemic. They brought in sales of $151 billion, which is 11.4% higher than the prior year, earnings per share growth of 30.1%, and an impressive 44.7% return on invested capital. Home Depot is paying a 2.75% yield for its dividend, paying out $7.60 annually, split into $1.90 quarterly payments in the months of March, June, September, and December. The dividend growth rate over the last 5 years is an average of 16.95%. And Home Depot has 12 years of consecutive dividend increases. And just look at this dividend growth. This is what you want to see in a dividend growth stock. And the payout ratio is quite low at only 45%. So this dividend looks quite secure. I'd like to take a look at the yield on cost for Home Depot, which is the yield on the amount you have initially invested, the amount of money you put into it. So if you had bought $1,000 worth of Home Depot today, you could expect to collect roughly $27.50 in dividends over the course of the next year. But let's say you bought those shares 5 years ago. Your $1,000 worth of Home Depot would now be paying you 4.65%. You'd be collecting $46.50 in dividends over the next 12 months had you bought on October 1st of 2017. And the 10-year yield on cost, wow, guys, this is why I love dividend growth investing. The 10-year yield on cost for Home Depot is 12.3%. This means your $10,000 investment 10 years ago, today, if you were still holding, you would be bringing in $120 in dividends every year. Dividend growth investing is awesome. Now, some investors do prefer ETFs and indexes to stocks, and Home Depot is prevalent in a lot of these ETFs and indexes that dividend investors happen to like, so you can get exposure in that way as well. For starters, Home Depot makes up 0.88% of the S&P 500, which you can invest in a low-cost ETF like VOO or SPY. That also makes up 2.18% of VYM, the Vanguard High Dividend Yield ETF, and it makes up 4.14% of SCHD, making Home Depot one of the few stocks that sits in the top 10 of both of these very popular dividend ETFs. And one more ETF I think is interesting with Home Depot is called XLY. This is the Consumer Discretionary Select Sector ETF. Home Depot makes up 8% of this one, and this looks to be a market cap weighted index with Amazon and Tesla taking up those top 2 spots, and Home Depot coming in third. This is sort of a way to bet on the consumer discretionary sector with just one, ticker. Just some thoughts for investors who prefer to keep their funds in indexes. Now, Home Depot is doing all the things an investor could want. They're growing revenue. They're doing aggressive share buybacks. They have generous dividend growth. And I want to highlight one more part of Home Depot that I happen to love as an investor, and it's the Home Depot Foundation. Now, this foundation works to improve lives for U.S. veterans, and they support communities impacted by natural disasters, and they train skilled tradespeople to help fill in the labor gap. In fact, on September 30th, 2022, the Home Depot Foundation committed $1 million to the relief efforts for Hurricane Ian. Now, folks, investing is a business decision, and I'm not suggesting the work of the Home Depot Foundation makes this worthy of an investment, but I am saying that I really love that I can invest in a highly profitable, well-run company that uses some of its profits for causes greater than ourselves. I like some of my investment going towards these causes, which I find to be worthwhile. It's icing on the cake, and with the recent events with Hurricane Ian, I thought it was worth highlighting as it really appears that Home Depot is a company that tries to be a force for good in this world, and that is something that I appreciate as an investor. So Home Depot, they do all the things, right? And we're at a 52-week low. We're trading at a PE that is well below its own average. And we are either in the midst of a recession or we're entering one. There could be a few rough years ahead. But if you keep in mind the long-term mindset, what happens when you hold stocks like this for 10 years, this could be one heck of an opportunity. So let's try to figure out a fair value for Home Depot and determine a buy price. If you've never seen my valuation videos before, what I do is I take the average of 6 different valuation models. I use Graham's revised valuation, a dividend discount model, a discount cash flow model, a dividend yield theory valuation, a PE mean revision valuation, and I add in the average analyst price target. I take the average of these 6, and that gives me my fair value. And then I apply a margin of safety to determine a buy price. Here is our valuation spreadsheet. I put it here on one screen nicely. I put in the ticker, the dividend, which is $7.60 a year at the time of publishing, our forward PE of 16.2, and a forward earnings per share of $17. First, for Graham's revised valuation, I'm assuming a growth rate of 12. This was projected by the analysts at Yahoo Finance for the average growth rate for the next 5 years. Now, the current yield of the AAA corporate bond is 4.68%. This number has been going up with rates, which makes these valuations lower. And from this model, Home Depot is coming in at $303.68. Next, let's look at the dividend discount model. This historical 5-year annual growth rate is 18%, and it's amazing dividend growth. Going forward, I have to assume as they are a mature company, the dividend growth could sustain in the high single digits. I'm going to assume a 7% dividend growth rate. I think that's being pretty conservative for going forward. And using a 9% discount rate, we get a fair value of $406.60. And this was about what I expected given this wonderful rate of dividend growth we have with this company, with an already nice yield. Let's look at the discount cash flow model. I'm assuming a rate of 12% just as we did for Graham's valuation and a 3% perpetual growth rate. Their current free cash flow is just under $11 billion and their outstanding shares are just over $1 billion. The estimated fair value for this model comes out to $263.46. For the next valuation, we're going to do the dividend yield theory. We simply do a comparison to Home Depot's 5-year average yield, which is 2.26% versus its current 2.75% yield. Now, if Home Depot was to revert to this mean, it would be priced at $336.28. Next, let's look at another mean reversion valuation by looking at historical PE and then calculating what the current price would be at that PE today. The historical PE is 21.2, while the current is 16.2. And by this metric, we are undervalued, coming in at about $360.40. Finally, I factor in the analyst average price target. Price targets vary between $470 on the high side to $267 on the low side, bringing the average to $356.33. Averaging these all together, I believe Home Depot's fair value is about $337.79. This is 22% upside from the current value. Please don't assume my assumptions are correct. I could be off on these assumptions, or a calculation could be wrong somewhere. And when doing valuations like that, trying to figure out a good buy price, it's prudent to have a margin of safety. And I'll show you various margins of safety for Home Depot. If you're comfortable with a 10% margin of safety, this gives us a buy price of $304.01. If you want a 20% margin of safety, we're very close. We're at $270.23, and Home Depot could have been bought up below this level earlier this week. Now, you can be super conservative here and go with a 30% margin of safety and wait for it to drop $236. This might sound crazy, but remember, a year ago this stock was over $400. And who thought it was dropping into the 200s back then? Personally, for me, this is an extremely high quality company. Getting it at a 16 PE seems like a steal to me. I like Home Depot a lot under $300, but my time horizon is long and I am fine with short-term volatility. In fact, I welcome it. Guys, I hope you found this helpful. If you did, please smash that like button. Do you own Home Depot? It's one of the stocks that we are currently buying in the Dividend Growth Income portfolio, which you can follow on this channel. So subscribe to get more types of this content. Also, do check me out on Twitter at DivGrowthIncome. I do love connecting with like-minded investors. Thanks for watching, guys. Until next time, keep investing.